Every few years, the world loses its mind about money. Stocks crash, investors panic, and suddenly, everyone becomes an economist on Twitter. But what if I told you, every major crash in history followed the same pattern? I'm the Lazy Economist, and today, we'll cover the history of every market crash in just 5 minutes. Grab your coffee. Let's go. Every crash begins with the same 3 words. This time's different. People get excited, prices go up, greed takes over, and then reality hits. Boom, bust, regret, repeat. Our first crash goes way back, to 1637. In the Netherlands, people started trading tulip flowers like they were gold. Prices went so crazy that one tulip cost more than a house. Then one day, buyers stopped showing up, and everything collapsed. Congratulations, humanity. Our first recorded bubble. Fast forward to 1929, the U.S. stock market boom. Everyone was borrowing money to buy stocks. When prices stopped rising, panic hit. The market fell nearly 90%, millions lost jobs, and the world entered the Great Depression. Lesson: when everyone's getting rich fast, something's about to break. The year 2000, everyone believed the internet would make them billionaires overnight. Companies with no profit but cool names like Pets.com got massive funding. Then, boom. The NASDAQ fell 78%. Thousands of startups vanished. But the survivors, like Amazon and Google, changed the world. Then came 2008, the housing crash. Banks gave out risky loans. People bought homes they couldn't afford. And Wall Street turned it all into a giant money game. When the bubble popped, it nearly destroyed the global economy. But it taught one big lesson. If you don't understand it, don't invest in it. And recently, we had the 2020 pandemic crash, followed by the crypto boom and bust. In 2021, everyone was a crypto expert. In 2022, everyone became a philosopher about long-term vision. Once again, excitement, greed, and FOMO, crash, repeat. So what did we learn? Markets always crash, but they also always recover. Each crash wipes out greed and rewards patience. In the end, the best investors aren't the fastest, they're the calmest. If you liked this 5-minute tour through financial chaos, hit that like button and subscribe to Lazy Economist, where we make smart finance simple. And remember, the next time someone says, "This time's different," just smile, sip your coffee, and say, "Sure it is."